Hello and welcome back, Zingers. Exciting day today. We have a new thesis from BigBeat. So I am Ryan Faluna. I'm here with BigBeat, and he is going to go over his new thesis. So I've got a details chart, or excuse me, a details tool pulled up here. I'm on the chart tab, and I have SPY loaded in. BigBeat, what is next?
Well, Ryan, earnings season is over. So when that happens, the news takes over. Usually it's news from the companies, but the news has been pretty light. And also we've seen the trade war heating up again. But when all that happens, the next thing we have to do is go back to the charts. Charts are the next biggest thing that's important in trading, and we always have to go back to the basics. In this situation, I'm going to talk about a short-term play, maybe a month or two, and I'm going to talk about something that's even a bigger, wider market that everybody can play, okay? So we're going to open up a SPY chart, the S&P 500, that's the ETF there. I love playing it because it's very predictable, and the volume is always right. You can always get in and get out. And I'm going to show you what 3 indicators to add to this chart to show you exactly what I'm seeing in the markets. Now, many people want to know when is the top in, when's the bottom in? Well, I'm going to tell you the top is in, at least in the short-term target right now that I have for the next month. So let me show you exactly how to do this, Ryan.
Okay.
The 3 indicators that I would like you to pull up are the pivot indicators. Now, there are 2 pivot indicators. That's right, the high and low indicator and the standard indicator. Now, the high and low indicator in this situation tells me what the high and the low prices are of the stock. And I'd like for you to add the MACD. Now, the MACD, a lot of people don't know this. The MACD is the moving average of the convergence and the divergence. What that is, it tells you the short term versus the longer term period. When there's a divergence, when this quicker line is going to fall below the longer term line, the longer term mean time frame. And in this situation, it's 12-day over the 26. Now, in this situation, Ryan, we've got it pulled up. You can see back in early October where that was trying to show you that maybe it was a buy signal right there, where the MACD had turned over by the 14th and crossed that line. We are also very, very close to that line being crossed over here. Now, one of the pivot points in the past has told you where the sell point was as well. If you look back in September, you'll see 302.63 on the SPY. And the reason being is it did not pass the first resistance line. That pivot line was in there for a reason. Lots of other traders saw that line and they sold right in there. Now, if you look in that section, you'll also see about 5 or 6 straight days of what I call spinning tops, or that time frame where they couldn't really push up, couldn't really push down. I call that sideways trading. Now, the traders call it sideways for a very reason. It can't push in either direction. It's not a heavy up or a heavy down. And so we've been seeing that over the last 5 days. Now, that's usually putting in a top. You'll also see that the volume, that's the line, the green line, those bars right below, right in the MACD, you'll see that those have also slowed up as well. So the volume is also slowing up to the bullish side. They're now about to turn bearish. So we're going to see in the next few days if my thesis is correct. But I am saying that the market's tops are in short term, probably for the next month. So I've said a couple times the holiday spirit is really high. The retail sector is going to be good, but not yet. We saw Walmart pushing higher, but the truth of the matter is the overall market has been trading sideways. It cannot pass the R1, which is the first resistance line. It's laid out 5 spinning tops. It's time to see the market pull back a bit.
All right. Well, that's really exciting. Thank you for presenting your new thesis. I got to say, BigBeat, you have been on a roll with your theses. So I appreciate you giving out another one here. That is absolutely fantastic. So thank you very much, Zingers, for joining us. And until next time, happy trading.